Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
I am glad to hear it. You look like you're out and about. Where are you?
I am in Timmins, up at the just south of the project site. So we've got our monthly team get together. So we're up here for the week.
Fantastic. And what do you do in these get-togethers? What do you talk about? How's it work?
Our team is spread out across Eastern Canada. So to bring everybody together to get sort of that little bit of cross fertilization. We have everybody in and we go through all the different functions that are going on. Obviously, between exploration, permitting, engineering, there's a lot going on, and we've got a great team, and it's nice just to hang out as a team as well and get to spend that bonding time. That again, in the older days, you actually all were in one office, and that's the way it was done. But today, it's good. We've got a great team, and whether they live in New Brunswick or Quebec or Ontario or Southern Ontario, it all works out pretty well.
Good together. Yeah, I know what you mean. You are obviously going through quite a busy period. I'm hoping to get updates from you guys with regards to everything that's going on in the back racks, and there's a lot of admin happening out there. But first, we are going to talk today for the folks listening in, watching this, reading about this, the world of nickel and what's happening. So let's start with the price, because we are going to get into some company news. There's some really interesting things happening out there. But first, what's happening to the nickel price?
Yeah, so up until yesterday, we were back down to the bottom end of the $20,000 to $22,000 a ton range, or $9 to $10 a pound for the non-metric people. That we've been in literally all summer since the beginning of May. We headed back down to the 20,000 level. The entire base metal complex, zinc, copper, everything. We had some Chinese deflation news out that's caused some of the bulls to retreat a little bit. And then today, we actually broke through my long-awaited call that I said what happened since the beginning of the year. We've finally broken through $20,000 a ton. And again, I wouldn't be surprised to see us spend a month or so down here. If it had happened earlier, I think we could have spent longer down here. But there's a few reasons why I think, I've always seen a demand strength coming through at the end of the year, and don't see any change in that happening.
I was about to say, you mentioned sort of China, deflation concerns, but actually, it's not all doom and gloom out of China. It's actually some good news.
Well, so again, for people who've been watching these our discussions, I've been very frustrated with analyst forecasts in terms of demand, and particularly around stainless steel forecasts. Stainless steel is a very, high demand product that's grown at 5 to 6% a year. It's going to continue to grow at 5 to 6% a year, not because one country or another country is growing faster or industrializing. It's because stainless steel is a high strength to weight material, which again, all about saving energy, is very important. It's also one of the most recycled materials that's out there. Also something people are very concerned about. So again, it's stealing share from the carbon steel markets. It's only 3% of the total steel market. So there's lots of room to grow. So despite the doom and gloom about China, despite the gloom and doom about, the global economy, the Chinese China Iron and Steel Association put out their production stats for the first half of the year. In stainless steel in total is up 8% year over year. In nickel-containing 300 series stainless steels are up over 11%. Now we've seen some decline in the rest of the world this year, as again, we've seen economies slow. But if all of this stuff is happening with China, if all of this stuff is happening with the global economy, and we still see this kind of growth in stainless steel, why won't we see at least 5 to 6% demand growth? Because we are getting to the top of the interest rate rises. Interest rate cuts are going to come, again, and the economy is going to start to reaccelerate. So, as I said many times, most analyst forecasts are far too low, and it's these kinds of stats, that should really underpin, this kind of thesis that, they are really undercounting how much demand is coming down the pipe.
Right. Okay. So China's hard at it. That's I guess good news in terms of price. Are there any other kind of factors, or are there any other kind of momentum plays out there which we need to be aware of or conscious of?
So the other piece that's happening right now, we're still not seeing. We saw a nice little surge in pickup from in the nickel sulfate market for batteries in China in the spring, but we haven't really seen too much follow through at this point in time. Again, I think part of it is we're seeing more of that production shift over to Korea, as again U.S. and Western automakers are picking up the increase in EV demand growth going forward, and the fact that you're seeing a lot more integrated production. So before, people used to take an intermediate, make sulfate, ship that sulfate to a precursor maker, who then turned it into a cathode. Now that precursor is just using that matte or MHP directly and doesn't go through that intermediate sulfate step. So it's making it a little more challenging to see exactly where the market is. Again, we came off some massive destocking through the first half of the year because lithium prices tanked so much. But now with lithium prices stabilized, again, expect to see demand from the ternary batteries sector for EVs pick up as we move through the remainder of the year and heading into 2024.
Right. Okay. There we go. There's the market news, folks. And there's a bit I want to talk about because we can talk about a few companies now, but I think one group who perhaps weren't expecting their week to look like this was FPX Nickel. Good CEO, good company, but they had a bit of news which tore their stock down by a third almost overnight. So what was happening there?
Yeah, it's tough. I know the CEO personally. I've known the company for a long time. FPX Nickel's great team, great project. Very thoughtful, thorough approach to advancing the project. But again, underscoring the risk around permitting in First Nations, one of the key communities, whose area that the project sits in, basically said the MOU that we signed in 2012, we basically unsigned that MOU. And we're not going to continue discussions with you, for the foreseeable future with concerns expressed around resource development in general. Again, this is something, just want to underscore. You could be flawless in terms of your approach. You can be flawless, with your personal relationships that are there. But, in terms of First Nations communities, they have elections every 2 to 3 years. You may have had a great relationship with 2 or 3 different chiefs over, a 5 to 10 year period. And all of a sudden you get a new chief in who's supported by, one portion of the community that may not be in favor of resource development. And then all of a sudden you find yourself halted. Now, again, one thing to keep in mind is that these elections do happen every 2 or 3 years. So even though you may have a leader in there who's not necessarily pro-resource development, it doesn't mean by the time the next election comes along that you might find somebody else that comes in. Or again, you spend the time and help educate them that mining today is not the mining of the 1960s and 70s, which left horrible environmental scars all over the landscape, in a bunch of different communities going forward. I dealt with that firsthand, with the Dumont project that we had in my past life at RNC, where we literally had 5 different chiefs over a 10-year period that I was involved with the project. And we never got to the point where someone was anti-development, but there were definitely more or less pro-development as we went through, and each one provided its own set of challenges. We talk about a lot of things here in terms of for investors to do your homework and check, and I cannot underscore enough, when you look at a project, don't just look at the country, assume Canada is a great jurisdiction and everything in Canada is great. Don't just look at the province and say, oh, Ontario is a good jurisdiction. Everything in Ontario is great. The situation where we are in Timmins can be very different than the situation in Northwest Ontario. Can be very different. The Ring of Fire can be different than in Southern Ontario somewhere. You need to look at the specific area where the project is. Have there been mines in that area? Are there mines operating there today? Have there been mines in the past? What do local communities say about mining and resource development? That should take you no more than 15 or 20 minutes. And again, that doesn't mean, if there's never been in a mine area, that doesn't mean that, somebody can't get something developed. It just increases the risk if there's negative comments about mining from the local community. If they're not experienced with it at all, the chances are, given if you Google mining today, you're going to get lots of more negative stuff than positive stuff. And so it's just something that takes a little bit of homework, but, you really educate yourself on the risk around a certain project, and you can save yourself, a lot of grief if a project, hits a wall, at some point in the future.
So let's talk. And I don't want to talk specifically about FPX here, but I do want to talk, generally about how things like FPX are facing now. Is First Nations are clearly that's the kind of social license component, if you want to sort of use corporate language, but the reality is it's how you get on with the folks on the ground in where you are going to be mining, where you are going to be putting your operations and have trucks driving up and down, quiet roads, and how you get on with those people is really, really important. We had lots of conversations over the COVID period about ESG, and people were for it, against it, understood it, didn't understand it. Let's put this in cold hard language here for people. If the First Nations do not engage with a mining group in their district, is that mining company going to be able to get their operations back up? And are they going to be able to operate, first of all, and are they going to be able to build a mine?
No. In a number of countries, if those local communities say no, then your project, will 99.5%, will not advance. So that's where again you'd have to do everything.
Or hold at best on hold, right?
Hold. Yeah. And again, right now in this situation, it may, again, they're a great team. It's a good project. They can just have to spend more time educating the community members who are holding sway, and hopefully get it back on track. But it's now a chunk of time and a chunk of effort that they probably weren't counting on 6 months ago. So just too bad.
Absolutely, like I said, this is not an FPX conversation. This is something's happened there. It's a conversation I want to have about generally, how this works, because again, we still got people coming on from outside, from previously, tech only or industrial only, retail only, who perhaps don't understand the nuances of what First Nations mean in context of getting permissions, permits, licenses, and the ability to actually get a project into mining, right? So we're saying generally First Nations say no, you are not moving that forward. You are going to have to do some work about getting them on board if you can, and that's going to take time and therefore money. Simple as that, right? Okay, cool. We better can you, just in terms of are there? I mean, there's lots of mining companies that talk about the need for involving First Nations and getting them on board and understanding it and involved and being part of it, and creation of jobs and financial benefits of that project. But there are parts of Canada which obviously don't have our own. The land isn't necessarily owned by First Nations, because how does it work over there? In the US, you can have all sorts of different types of land with different titles and ownership structures. What's it like in Canada?
Yeah, so generally there's two types of, from a First Nations perspective, there's ceded and unceded territories. So there's parts of the country that treaties were signed with the local communities at that time, to basically agree on how resource development or ownership or whatever could be done. The reality is even in those places where there's treaties in place, again, you'd have Canada, or before Canada, the English Crown negotiating with First Nations groups, who may not 150 years ago, 100 years ago, really understand sort of the overall broader implications of what they're. So, in unceded territories, you basically, we have, in Toronto, it's the city of Toronto is on land that, is the territory of the local communities there. Parts of this downtown Vancouver, are on territory that was not ceded by different communities, and even those ones with treaty, effectively. The reality and the right thing is the fact that it's, you're on their territory, and you need to, work in a way that A, recognizes that right from the start, and then B, work in a way that makes it mutually beneficial for everybody involved, for your project to go forward. And then on that basis, and we're lucky where we are here in Timmins, with that approach, we've been very successful. But again, I've had, the people, the communities I work with here who told me some horror stories, not from like 15 years ago, but from 2 years ago, that there are still some dinosaurs in the mining industry who, haven't really woken up to that reality yet.
Right. Interesting. And obviously you've been involved with a few projects yourself, but they seem to have been in areas where there's sort of well-established mining companies and infrastructures and towns and, employees and, all that kind of secondary wealth that mining can create. Those, where it's kind of embedded into the local community financially and I guess mentally and emotionally, it's going to be a little bit easier, I suspect. Is that right?
Oh, for sure. I mean, mining is a risky business in so many dimensions. And if you're able to basically say, okay, I'm going to, eliminate or greatly reduce one set of variables, the assets I've been involved in, whether it was, the Raglan project, West Raglan, that's now part of Orford Mining that we picked up with RNC, or the Dumont project in Quebec, or Crawford and the Old Timmins Nickel District here, or the Beta Hunt mine just outside Kalgoorlie, and that Reed Copper mine just outside Snow Lake, Manitoba. They're exactly, those kinds of communities, they understand mining, the benefits, and the impacts that are there. They understand, how, the opportunities from an employment perspective. You've got, supplier bases that can help get something done very quickly. You're not bringing somebody in from 500 miles away to have them get set up to, deliver whatever service you need. They're just down the street, and that just makes everything cheaper, faster, and ultimately more valuable in terms of those operations that you're able to develop.
Right. Okay. Well, like I say, there's a lot to unpackage there. We wish FPX well with the process that they're gonna go through the next few weeks. Let's talk about the metals company. I've spoken to them a few times, and it's kind of as we say, we're a Marmite. You kind of either love it or you hate it, or you believe it or you don't. But they've been taking some big strides recently. What are you making of that?
Yeah, I think we talked, and if we didn't, I'd meant to, back in early June after I was at that conference, in Indonesia. And so, I think one thing that's been a significant help there is they're now partnered with some Japanese companies that are basically running, what used plants that still produce a little bit of nickel, but not much the same sort of rotary kiln electric furnace plants you see in Indonesia. And you can utilize that set of equipment to process those nodules into this, sort of into some very usable and upgradable products from that point in time. So it basically takes one of the risks out of, before they were talking about building a big, multi-billion-dollar processing plant. And so now if you're able to leverage some existing infrastructure, that obviously, it reduces the cost of entry pretty significantly. And so, the stock since early June has moved up, pretty nicely, and then had another leg up over the past few weeks, where they basically said, look, we're going to apply. There were supposed to be final decisions on how things could be exploited. Those, again, the entities that are responsible for coming up that punted the ball down the field a little bit longer. But the metals company said, look, we're going to apply for a license in 2024, and we could start mining by 2025, again, using this existing infrastructure to process it. So off the back of that, they've raised $27 million. So again, having momentum towards production and cash flow is always helpful. So we'll see how that goes. It's still a big question mark about pulling nodules several thousand meters off the bottom and getting it delivered to land somewhere. We have to see what that actually is going to cost. But it's, again, we need all the metals, and it'll be interesting to see how this unfolds over the coming months here.
For sure. I mean, they've had quite the ride. Their stock has had quite the ride. As news, as people get excited and then digest it, and then need to kind of work it out. It's been a bit of a roller coaster for them. So I'm intrigued to see where it goes for the rest of this year. But yeah, good news. Magna Mining, young Jason, he's been on with us recently. What's the news from them?
Yeah, so some pretty nifty drill holes this week. 3% nickel plus some PGMs and copper over 30 meters, and a second hole with 4% nickel and copper and PGMs over 28 meters from what they're calling the 101 footwall zone. Again, very nice to see. They put out a PEA on this deposit a few weeks ago. These results and some other recent results around that are not part of that PEA. So, this is some additional cream, on top of the cake with regard to this deposit. Just one thing, I just want to use these results to highlight to investors. The key thing here is these were effectively infill. Now they widened out what they thought was there fairly significantly, but they did have a drill hole in set of drill holes in 2022, and these seem like they're sitting in between them, and then those holes and these holes were sitting within a couple historical intersections from drilling that had been done, by a previous operator. So again, with high grade stuff, you do need to infill it to a relatively high density, but the key thing here you should always look at, when you see drill results is, are they expanding the resource? Are they stepping out, along strike or at depth? Or are they just kind of, going back into places where they are, and the only benefit really is making it thicker, than it was before. So again, good to see those results up, but just a little bit of an asterisk in terms of, the total overall value, to the project going forward.
Right. Okay. Yeah, I think we should link to the discussion we had about that several weeks ago on the topic of being brave with your step outs and really adding value, or perhaps being a little bit inward looking. Right, and two more to go. Widgie Nickel, a little bit of news from them. Tell us the news, and we'll chat about it.
Well, just before we get to Widgie, just want to sort of the other end of the step out spectrum is our neighbors up in Timmins, Aston Minerals, put out some results just the last few days, where again they put out a 2.5 million ton contained nickel resource. They're drilling in an area that's about 2 kilometers away from where the resource is, and these 3 holes that they've drilled so far have extended from what was originally drilled about 500 meters, along strike. Again, when you've got a great geophysical model, and the nature of these deposits is you can really be very productive. Again, it's some very similar deposit to Crawford. So again, good to see, some success, with these kinds of deposit, with the same kind of template that we've been using with Crawford and the other 20 properties we have. It's great to see Aston, hitting some, very, very similar and successful holes. There's no assays back on yet. They're just reporting the amount of mineralization that's there. I know from our perspective, we've got a pretty good, can visually estimate the grades, pretty well. So I think these will be some decent holes that they'll be happy with. So, good to see. And again, the bit, again, people always criticize, lower grade material, but again, in the right structure, like the ones that we have, like Aston has, you can add a huge amount of nickel tonnage, without spending a lot of shareholder capital to get there. So, and that's ultimately what miners want to mine is actually metal tons. So not great.
Good point. Okay, so Magna, infill, Aston Minerals, stepping out, being brave. Okay, we'll have a look at that. Then back to Widgie Nickel. Sorry, tell us about what they've been doing.
So we've seen a number of companies sort of highlight their lithium opportunity as well as the nickel opportunity, and again over the last 12 months that's been pretty successful. Widgie Nickel is actually I think would say probably the farthest along with those is they actually have a deposit that they've applied to get the permit to start mining, and they can ship it to one of the local lithium processing mills in the area. So again, good to see those guys unlock value on those properties. And then the other one is Azure Minerals, which 18 months ago was a nickel explorer that had made some nice discoveries in the Pilbara region up in northwest area of Western Australia, and they've actually found some much better lithium deposits, and so they announced that they turned down a $600 million offer from SQM. Again, good to see some success, whichever way you need to get there. So, well, do you know what Azure Minerals is going to do for the market is confuse everyone, because
even before the nickel, lithium, we're on lithium now, even before, and nickel before that. Before that, they were in Mexico, failing miserably. And they only segued like last year, right? So that it's very confusing. So it says to you, like, if you don't succeed, try again. Can work. Invariably in mining, it doesn't. But here's a case where it absolutely has knocked it out of the park. It was as high as 290 recently. I think back down to more sedate 250. But when we started talking to them, 20 cents. So a fairy tale story indeed. Well done. Seriously, good on them. You know, so good. It comes back to good team. Obviously, they've got the kind of Creasy group involved there, but Tony Rivera is a solid team with a good track record, and that counts for a lot. Well, there we go, Mark. There's a little run through. Thank you very much for your time this week. Good luck with your team get together, your team meetings, and we'll see you next week.